Hey everybody, Economic Ninja here. I hope you're doing well. We're going to talk about stocks, primarily mining stocks. I've been talking about a lot about these lately because I've been getting people prepared for a crash in the dollar, right? It's not going to happen tomorrow. It's not going to happen next week, but it will happen. Eventually, all fiat currencies go to zero, but they don't disappear, right? They just go down in value. Why do you know this? Because of inflation, right? The longer a fiat currency stays in action, it loses its action, really. It loses value. Things get more and more expensive over time. Just ask somebody that's, in their 70s or 80s, ask them what gasoline used to be like when they were first driving. And that's just the truth. The dollar becomes worthless and worthless, more and more worthless. And wages just never keep up with fiat currencies, okay? Eventually they get replaced with a whole new standard. That's what's about to happen with this. And we're moving into a transition of precious metals are going to start to really take off in the future. Can I tell you when? No, I can't. But I can tell you it will because it's a 100% certainty because that's what's happened throughout the dawn of time. And if for some reason you think this time's different, well, I don't know. You're all kind of special then. Because history always repeats itself, right? So, I talk about holding physical. If you don't hold it, you don't own it. I totally agree with that. But then sometimes you have so much and you go, I'd like to take a little bit and leverage it. So I want to get involved in these mining companies. And we're now just starting to see, because they've been getting so hammered, we're just starting to see some pops. And so a few of the companies I've been talking about have popped anywhere between, 30% and 150%. And I want to emphasize the importance when you're investing in something, even over the long term, of taking a win. I've talked about this before. Taking profits off the table is so vitally important, especially when you have a good run on a percentage basis. And that, this isn't financial advice. I'm not a financial advisor. I'm an investor, right? And I've done things right before and I've done things wrong. And one thing that I've done wrong is get overly emotional and believe that something's going to go to the moon. And not take profits on the way up, all right? Another thing I've done that's wrong is when I invest in something and the next week it tanks and I don't really understand it because I don't understand market dynamics or, investor sentiment, things like that, what's happening with whatever company I'm investing in, and then I sell, and then only rebounds, right? Because I didn't really see the big picture, right? I didn't understand market cycles. If you guys want to learn market cycles and trading technical analysis, I've got a link I'll put in the description to swing trading, Johnny's course. It's amazing, right? But it's another thing to also understand, like when you've got to take profits and when you got to pull money off the table, especially. Don't ever forget about having a core cash position. That's one of the biggest things that I've ever learned is having cash on the side for an emergency, but also for an opportunity. When, a news story comes out, a geopolitical threat hits and it takes out an entire sector and like literally overnight, everything sells off. We just saw that in lithium. Lithium is up like 4 or 5 times this year. But a month ago, Canada said, hey, China's not allowed. We want you to divest out of the lithium sector as we know you're trying to buy up all the lithium mines in our country. And literally, it was a flash crash, 1 or 2 days long, and every stock in the lithium sector took, 10, 20, maybe 25% losses. And then literally 2 weeks later, they're back up, right? And those are the opportunities that you want to have cash on the side when you understand the greater picture. But again, if you deploy that cash to buy a stock, remember, you've got to look to how are you going to gain cash? You're going to sell another asset that's doing well, something like that. So it's really important to always be able to pull money back. And when you make gains, the problem is you're always thinking it's going to go higher and higher until it's not. And then as it starts to sell, it's an emotional cycle that you go through. And you're like, well, maybe it'll recover tomorrow. No, it's not. Maybe it's going to recover next week. Maybe it's not. It just keeps going down. And it's important to get gains. And then don't be bummed if you make 10 or 20% on a stock, or let's say you make 100% on a stock and you pull half of that back and you pull your money back and you've got it. And then it goes up it doubles again. You can't look at it that way. You've got to be happy with your win, right? And the goal is to go from one successful investment to another successful investment to another successful investment, right? And so how you do that is first off with patience, and then secondly, literally being able to just chip away, pull profits, chip away, get to the point where it's their money, that you're invested with. And then as that goes up, you pull profits. Now you're definitely in the green, right? You're in the green when you're playing with their money anyway, right? You double your money, you pull back your half, and the thing is too, you have to remember there's taxable consequences with all of that. A lot of people, they get into day trading and they don't consider, the taxable consequences of day trading. So you have to remember that. You have to set aside money for taxes. That is the most important thing. because that's what really gets people in trouble. And then they're having to sell things they don't want to sell just to raise money for the tax man, right? We don't want that. I think that it's very, very vital that people understand how to protect themselves when they're investing. And another thing too, again, when we're talking about leveraging the gold and silver markets, you don't want to do too much. I'll give you an example. A ratio that I heard before is people that are in physical, they take about, whatever their physical is worth. Let's say you got $10,000 worth of physical gold and silver, platinum, palladium, whatever, and you want to invest in mining stocks. You shouldn't be investing more than 10% of your entire net worth of that metal. You know what I'm saying? So if you have $10,000 worth of physical metal, and you should, if you want to buy mining stocks, look at taking $1,000 and putting it into mining stocks. But then out of that, diversify that over a couple, 2 or 3, and it's all about you, what you feel comfortable with. But the more diversified you are, you're not going to have as much upside potential if something takes off on a percentage basis, but you're still making a percentage return, and it's really a safety net. All right. And that's something that's worked with me, and I wanted to share that with you because we're going to come into some volatile times. I still believe that there's going to be a paper sell-off of precious metals. I want people to understand that. If the stocks, the greater indexes sell off, hedge fund managers, mutual fund managers, private investors, they're going to be selling their insurance. And a lot of them have insurance in paper, gold, and silver, which is fake. But the second they sell those, they hit the sell button, there's more selling pressure on that paper. It's going to sell off the paper price. Even, it's not going to matter you trying to go and buy a physical ounce, trying to get a deal, because the premiums are going to shoot up right away. But it's going to drastically affect the prices of the stocks, the mining stocks. And that's why I've been buying this summer, because the mining stocks have gotten so absolutely hammered after gold and silver came off their highs in January. And then watching the mining sector, I'm like, this is a deal. This is what Warren Buffett dreams about. And this is why you saw AMC Theaters buying into a gold mining exploration company, because there's deals out there, and they know that. And they know this thing's about to switch. And when it happens, we're going to move in. I've been bringing you stories about these mining exploration companies being called by, one of them, a large hedge fund, actually 2 large hedge funds called and said, hey, we want to take positions in the companies right now. And I'm telling you that to build that narrative and showing you what's going on behind the scenes, but it still doesn't mean that tomorrow there can't be a Piper smackdown. So you want to nibble at these things, and then you want to pull profits when you have profits, sound money profits. You want that money in your hand because you want to be ready for the next pullback. Because I'm going to tell you, this bull market will take off over time, but it's going to look like this, like almost straight up and down over like the next 3 or 4 or 5 years. But what's going to happen is these ups and downs. You can't see it over long term on a chart, but it's these big waves of emotion, buying and selling. And I want you to be set up for success. I don't want you to fail. And so that's probably the greatest lesson I could teach you from my investing experience, is controlling your emotions and knowing when to pull profit. That is a decision you have to make, but it's a decision you need to make. Now, you all also notice that I have this video set up in a play box or a playlist of stocks that I own. So every once in a while, when a stock that I'm covering that I own, I put it in this playlist so you guys can take a look at it and continue the coverage on those stocks. But I just want to show you what I'm doing. Again, I'm not a financial advisor or a financial professional, but yeah, there's a lot of money to be made. And there's times that I'm going to be telling you things about companies I can't even sell because I buy some of these stocks off market in private placements. And so I'm on like a 4-month trading halt usually but even with that said, I just want to tell you what I would do in normal circumstances. And when stocks go up exponentially and I can trade them, I'm going to take profits. That's important that you guys know that. And so I can't take profits on anything right now that I've got, but it's because of trading halts. So honestly, when I can, I'll pull a little bit off the table. So I just want you to understand that that's what I'm thinking. And I think that's the greatest way we can learn is from each other's life lessons, both the good ones and the bad ones. All right, guys, hope you got something out of this. If you did, put it down in the comment section. I really appreciate it. And with that being said, the Economic Ninja is out.